Good afternoon, everyone. This is Corey Hinkle here, and I'll be your host for the Ankerstar Wealth Daily Update. We have had a busy news day today. The Fed meeting, there was some geopolitical news that came out, and then some news, really important, interesting news that came out around Google, which is a core holding across a few of our different models. So I'm going to be doing a little deeper of a dive on Google today and kind of the future of Google, our view and my view specifically. And then we'll just hit on kind of just a really quick market update as well. Before I get started, I want to remind everyone that this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. All right, let me get this screen shared here. So as a market update, the Federal Reserve did choose to leave interest rates unchanged. And the last I saw, the market is really very flat after this news. So just trying to digest that. And a company that wasn't flat was Google. So you see, sometime a little after 10 a.m. this morning, there was a very quick and sudden drop in the stock, which led to about an 8% drop throughout the day. Very large drop for a company that started the day right at a $2 trillion market cap. So let's dig into this, and I'll share my opinions around this. So the news that came out, a senior vice president of services for Apple, a guy by the name of ADEQUacY, was speaking during Google's antitrust trial on Wednesday. He said, this could be to the benefit of Google in a way, but we won't really, well, let's just see what he said. He said, Google search for the first time ever in April saw less volume than the month before. Up until then, he mentions that last 22 years that had never happened. And let's go a little further. He says also in this antitrust trial that he believes AI search engines will eventually replace standard search engines. I think we all know that by now, to a certain extent. Of course, you could debate how much of that. He said he expects, so this is the real kicker, to add artificial intelligence services from OpenAI, Perplexity, and Anthropic as search options in Apple's Safari browser. Okay, couple things here. One, for Apple does generate between 20 to $25 billion a year in revenue from this agreement with Google. So this is a negative on Apple to the tune of that revenue number I mentioned. For Google, on one hand, they would be saving the 20 to 25 billion. They've been paying Apple for that exclusivity, but Google search does, it does face, to some extent, an existential threat here if they don't act and respond accordingly. Now, Google did mention in their prior earnings call that they have currently 1.5 billion active users using their Gemini AI search overlays within their Google search product. So Google's not really being left behind in AI, but they're going to have to integrate quickly, and they're going to have to deal with competition they haven't had before. So these comments from ADEQUacY, it exacerbates this fear around what you see on this chart. So you've got the ChatGPT user growth versus that Gemini user growth. That's Google's AI product. And ChatGPT does have more momentum than Google. But of course, Google search overall does have a larger user base than a ChatGPT does. Again, the search landscape is changing, and Google has to adapt to that. Let me get into, I want to share some of my opinions about Google as a business and the future of Google as a business. This is certainly an interesting time for Google. Their about half of their revenue does come from Google search advertising. And so their total revenue annually is about 400 billion. And they're getting about 200 billion of that revenue from that Google search advertising business. So half of their revenue. It's a high margin business. It's a good business. And of course they are paying, 20 billion of that 200 billion a year to Apple. So, okay, they're really making about 180 billion as far as gross margin on that. But, and that doesn't account for everything that goes into that. It's not quite that simple. But what do I think is going to happen to Google search? I think I do adopt the thought from Joseph Carlson philosophy of search itself is growing. Google search has still been growing as of their last quarter that they announced in April. Google search has been growing, and I don't see a pathway for Google search to lose its position as a valuable market participant. There are some things that people ask the AI search engines that they would have never asked Google, and like such as make me, a meal plan for this or that or whatever. There's a million different use cases there that Google search really was never intended for. Google search has other integrated products as well that are also part of that ecosystem. So you're looking at Google Maps and other ways that businesses integrate and interact with Google, and therefore build their place, their digital footprint, right? I don't know that you'd see Google search advertising have a decrease in revenue in the near term. Could revenue plateau there? Could revenue eventually settle and turn lower? I'm not fully convinced of that, but I'm not also ignorant to the idea that it's possible. So it is a possibility, and that's what you saw priced into the stock today, and frankly over this past year. The stock has had a harder time getting moving, getting momentum. Some of their other businesses. So Google is a diversified business. The other half, you've got YouTube. Oh, and I want to break this down kind of by market cap here. So today the stock is trading for 1.8 trillion market cap. YouTube we know is bigger than Netflix based on data and those things. Let's say that Google has just a slight YouTube has a slight premium over Netflix if it was a standalone company. YouTube would probably have a market cap itself of about 600 billion. Of course, different people would have different perspectives there. That's my perspective. Okay, then you've got Google Cloud. Google Cloud is doing about 50 billion a year in revenue. That's a high margin business, and it's growing 30%. Year over year. Okay, a business like that is probably going to have a price to sales ratio of at least 8, possibly even higher. Let's estimate that if Google Cloud was a standalone business, and they did just do a large acquisition for cybersecurity services as well, let's imagine that business itself is probably worth 300 to 500 billion. We'll say that. So let's say midpoint about 400 billion on its own. So, you've really, with YouTube and Google Cloud, you're really looking at about $1 trillion worth of value just there. Google also does have Android, which has a 70% market share in smartphone, in the smartphone business. As far as an operating system, they have recurring revenue there, and they're running close to 50 billion a year revenue there as well. And that does also include Pixel phones, Google Nest, and some of their TV services. So, the Android product, the Android operating system, the Pixel product, these other businesses, they're growing about 8% year over year. You're probably looking at a few $100 billion of value there too. And of course, that's outside of search advertising. None of this really takes into account the integrations that Google has with their suite of products. I'm sure if you're listening to this, you've probably used some Google Drive or some other Google product, maybe Gmail, something like that. So there's a lot of advertising and benefits and things that go with that. This is Google's current revenue by segment. These things are all growing. So you've got search, network, cloud, YouTube ad subscriptions, and other bets. I want to highlight this. Google, they changed their name to Alphabet for a reason. Alphabet, like 26 letters. Google's always had lots of different businesses underneath their umbrella. And one of them, which you've probably heard us talk about before, is Waymo. If Waymo was a standalone business right now, I'd personally estimate that 30 to 50% of Tesla's valuation is based around self-driving technology and licensing and things like that, which that would put Tesla's self-driving valuation around 400 billion. I don't think Waymo would get quite that, even though they do have a very viable and active product in the marketplace right now. But I do think you could probably see a market cap if Waymo was trading on its own outside of Google, probably around 100 billion, under the right circumstances. And Waymo is obviously growing quickly. You can see lots of different products here that Google has that no one talks about because they are smaller. They're longer term bets. Google owns, if you go over here, Google Capital, so they do own they do own pieces of other companies. They own small pieces. One of the companies they own a piece of is CrowdStrike, which is obviously a huge S&P 500 company. I don't know the ownership percentage there though, off the top of my head. You see this infrastructure down there. You may have even heard of Google Fiber, which is like an internet providing service. That's not a small business either. And then Google has hardware. So you've got the Pixels, you've got those Chromebooks that are those affordable kind of simple laptops that people use in schools and for kids and things like that. So Google being down 8% today, is this a company you sell here today on this news that search is changing? We know search is changing. My view is Google is not a company that you can bet against here today, especially after a move like this. This is not a company that you can bet against. And one more thing, for the people who really like next generation technology, Google, we highlighted this on our show a few months ago. Google introduced Willow, which was the next generation of quantum chips. I personally think that Google or Microsoft are going to be the eventual quantum computing leader. And, can't say for sure who. I think it will probably be between one of those two. I know IBM has a viable product going as well, but I lean toward a Google or a Microsoft. And Google's heavily involved there. So that's another thing. That's another asset you have when you own a stock like Google. So it's a very hard company to bet against. Anyway, that's what we saw today. That's my opinion. Tell us in the comments down below. What do you think? Do you think these other companies and assets that Google owns are going to be enough to get them through, this new generation of technology or these changes in the search market? Or do you think something different? So that's all we have today. We will check back in with you tomorrow, and have a good one.